After we know how to start our trading day the right way with the Edgewonk and the few points that I gave you in the previous video, the next step obviously when it comes to journaling trades is that we also want to improve our performance, the way we execute our trades, manage our trades and approach the markets in general. And I will just give you 5 metrics and tips and principles that you can use in Edgewonk and that you should pay attention to when it comes to optimizing your orders and your trading in general. So the first one is very basic. We are starting with the basics and then get into the more specifics. So we are looking at reward to risk ratio, which is also the triple R here, and the R multiple. And the reward to risk ratio, it measures the profit and the potential loss of your trades, and then we build a ratio with those two. And the R multiple, on the other hand, is a performance statistic which then looks at the final outcome of your trade, and we can analyze your performance in terms of our risk. And one more thing is that many traders overlook is that if we have the potential reward to risk ratio and the finalized R multiple, we can put them together in very meaningful ways to get a much deeper understanding about trading and order execution. We output the reward to risk ratio and the moving average in different areas in your trading journal. So when you open your journal, you see it directly here in your overall evaluations. You can compare the reward to risk ratio and the R multiple. This is the average and the sum of the R multiple. Here also you can get the same statistics for your running weekly stats, so you can see how you are performing in the current week. But there is more in Edgewonk, and when you go to the journal tab, we have something that we call our traffic lights, and they measure the reward to risk ratio here, which is the initial one, as I said, when you enter your trade. And then here on the right hand side we have the reward to risk ratio analytics for the reward to risk ratio when you close your trades. And so you can see right away if there is a green traffic light, it means that your reward to risk ratio is large enough for your current win rate. And if you see that you have a red light, then it means the reward to risk ratio for such a trade was too small, and over the long term it is not advisable to take such trades. Even though you might up with a winning trade, they should be avoided usually because the payout potential is not strong enough. And then here finally in the trade management, we also have your R multiple here as your current performance in orange, and then we overlay it or compare it with your potential performance also in terms of R multiple. And here we measure your trade management, and here we can very nicely compare what you actually did with what you should be doing and how much money you could have made, so you can get a very nice understanding of how much money you are leaving on the table and how well or how bad you are managing and mismanaging your trades. And here this is also a very important metric to know about your trading, which can then help you improve the way you manage your trades and get a deeper understanding of your trading in general. Expectancy is another important metric, although it is a little bit basic, but nevertheless it is important to know, especially when it comes to the long-term mindset and the long-term thinking. So expectancy tells you how much each trade is worth for you on average and over the long term. So for example, if you have an expectancy of 1.5% after 100 trades, it means that on average you make 1.5% per trade over the long term. So expectancy, as I said, is very important to know about your trading system, and especially also for each individual setup and strategy that you trade. And you can use the expectancy as a confidence builder. If you know that you have a positive expectancy, you can push through losing streaks and drawdowns because you know that eventually it will end and your system has a positive expectancy, which means that your account will grow nevertheless over the long term. And here expectancy you can also get in your home tab, expectancy for your overall trading, and here also for your running weekly stats, which is very important. And then here under trade analytics, which is a very detailed breakdown of your trading performance. And here you can analyze your performance based on your personal and individual trading setups or strategies. You get a very nice breakdown with lots of statistics here. Again, you find the reward to risk ratio and the R multiple here. And here at the beginning you can see we have the expectancy, and this is the expectancy in monetary terms. So as long as you see that you have a positive expectancy, then it means that over the long term this strategy is performing well for you. You're making money on this strategy over the long term if you have a positive expectancy. In the simulator, which we will come later to as well, you can also see your expectancy here. And if you want to get a better understanding of how the different metrics and parameters in trading interact, you can untick this box here. You can change the metrics for win rate, the average winner, the average loser, and then also the expectancy, the reward to risk ratio, and the other ones update as well, so you can get a nice understanding how those metrics influence your expectancy. And then also once you start simulations, you can play around with them and then see how the potential performance will also change. Updraw and Drawdown are very specific in Edgewonk, and we built them specifically because we want to analyze the way price moves towards our stop loss and take profit orders, because then we can improve the way we set our stop loss and also the way we set our targets based on those two metrics. So the Updraw measures how close price came towards your take profit, and on the other hand, the Drawdown measures how close price came towards your stop loss. And so with the help of those two, I will show you how to improve your order placement in your trading. When we are here in our trade analytics again, then when we scroll to the right, you can see here the Updraw and the Drawdown value, which, as I said, the Drawdown measures how close price came to your stop loss order, and the Updraw measures how close price came to your take profit order. And you can see here these metrics come in percentage, which means that when you see here 86%, it means that price on average comes 86% towards your take profit order, which is not a bad ratio overall. And you can see here on the right hand side, we have the MAE and the MFE as well, which are essentially the same, but those metrics don't put the price movement in relation to your stop loss and your take profit order. So here you just see the general point values, how much price went into your favor and how much price went against you. And so you can use this information to improve the way you set your stop loss orders and your take profit orders. Emotional metrics is something that many traders overlook, and many traders don't even know how you can track those. And in Edgewonk, we took this approach and we built in a few emotional analytic functions, because it is very important that you have a good understanding of emotions, discipline, how well you execute your trades. And that is something that we will do in our tilt meter. And also we use other metrics, custom tags or custom statistics, which you can set up personalized based on your own trading, your own challenges, and things that you want to analyze and track in your own trading. In our journal, you can see here, this is the tilt meter, which is very important, and I briefly mentioned it before. So you can see here, if the tilt meter is green, it means that you have assigned positive attributes and you have respected your rules, you followed your trading plan, and so you get a green bar. If you see that the bar is red, it means that you broke your rules, you made bad trading decisions, and you deviated from your plan. So this is a very nice way of visualizing your overall approach, your mindset, and as well how disciplined you are and how well you can respect your rules. When you go to the equity graph, you can see in the background, we also overlaid the tilt meter here behind this equity graph, and so you can also see how the tilt meter develops over time. Do you see rising or falling tilt meter, and then how does it compare to your trading performance? You can also analyze different setups here. You can analyze different or individual instruments. Here are comments. You can see you can analyze only the trades where you entered a specific entry comment, an exit comment. Position sizing, you can analyze only your last 10, 25, 50 trades, and so you can get a very detailed insight about your trading performance. And also with the help of the tilt meter and the emotion analytics, you can analyze and dissect your trading very personalized. And finally, account volatility, getting a feeling for drawdowns and risk in your overall trading is also very important, because many traders always worry and doubt their system, especially during drawdowns. It is very common that traders deviate from the good path and then they try to make up for losses. But the Edgewonk simulator takes your current trading performance, it performs a random simulation, and it shows you what to expect over the long term, so that you are prepared once you hit a losing streak or a drawdown, and then you can stay calm because you know it is normal. And you can also get a much better feeling and understanding of how the different metrics and parameters in your trading interact with each other. And so finally we come to our trade simulator, which is a very good confidence builder. And if you find yourself in a drawdown, it is always advisable to come here to the simulator, see how your potential account performance or development could look like over the long term, start a few simulations to get an idea for drawdowns and swings. And then here as well, when you untick this box here, then those become editable. You can change them around so you can see what happens if you trade with a lower win rate. The account swings become greater, so you get a feeling for win rate impacts your overall performance. You can change the average win and the average losing size, which will then also change your reward to risk ratio. So let's say what happens if we only take trades where we have a reward to risk ratio of 2-to-1, and then what happens to our equity performance. And you can see here the equity is up a lot, and you can now also see if we reduce our win rate, and even if the win rate is not as good, then you can still see the account growth is positive. So you can see and get a feeling for how the different parameters, win rate, reward to risk ratio, and expectancy here interact and what to expect in the future, which is always very helpful, I think, to get an understanding where the path is going and to understand the account volatility and drawdowns. And when you scroll down here, you get more breakdowns for your statistics, and you can see here the gain over the 500 trades, the longest losing streak, the longest winning streak, how many winners and losers total you had, and also volatility you can be found here. And so just play around with this a little bit, get a feeling for your trading method and what to expect in the future, and then you can build your confidence and get a better understanding of your trading overall.